what are you most confident about, with an assumption that from whatever little I heard from you, that you believe Indian markets would largely be resilient, durable bottom, and will correct less, even if the global markets were to go in with a bit of a tailspin. So where is it that you have the maximum conviction as somebody who overlooks almost all, or rather overlooks all the equity schemes at your AMC? What themes do you think will work out the most over the course of the next 12 months or 24 months?
Yeah, so I think what we see is that the domestic recovery is India is still recovering up to the pre-pandemic growth rate, right? We are still slightly below that trajectory, but we are slowly getting it over there. And the consumption, if you look at which had got impacted because of the second wave last year, that is slowly coming back. Both consumer, rural consumption is slowly coming back. Consumer discretionary also, we've seen like auto and other sectors starting to show very decent growth, though they are still below the pre-pandemic highs. So I think some of these sectors, domestic consumption-led sectors, I think should be steady. Again, we're not expecting any kind of a spectacular growth over there, but I think they'll continue to grow at a steady rate what we were growing at earlier the pre-pandemic level, which is not a bad growth rate in the current context where we are seeing global growth is going to be a challenge. So domestic consumption sector, be it discretionary, retail, then a lot of some of the consumer durables also where there has been some impact. We see again growth normalizing, and more importantly, I think some of these sectors were also hurt because of the higher commodity prices in the last year, where we saw margin impact over there. And since commodity prices have started correcting both in the metals as well as in the food prices, companies should see a margin improvement, at least at the gross profit level. So, and some of these companies normally tend to have a better pricing power, so they should be able to retain some of that. So, so these sectors look good in terms of their outlook, earnings growth outlook over the next couple of years, and they should do well. Besides that, to play the domestic economy and the recovery, what we're seeing, the banking sector looks, we're positive on that sector. We are overweight as a fund house. And there again, I think the credit growth has been fairly decent now. It's been now around 14-15% compared to high single digit growth last year. And I think that should continue, though it could moderate down because of the nominal GDP growth could slow down next year because inflation, WPI, will normalize a bit. But having said that, the overall the pre-provisioning profit growth should be fairly good because margin NIMs, net interest margins, are likely to improve on the back of increasing interest rates. I think initially, I think the banks are still sitting on a lot of deposits, okay, which are being deployed into the GSEC market, okay, which is not earning that much yield. And as the loan to deposit ratio starts to increase, you should see margin improvement over there. And the overall credit cycle is going to be very benign. We're not seeing any major credit crisis, and the corporate credit cycle is looking very good. Corporates have delevered significantly in the last couple of years, and they should start to again relever. So that should also help the corporate credit growth to pick up, which was kind of weakish in the last 2 years. So banking sector looks good again. The valuations there are fairly reasonable, okay, compared to the long-term average. So banking, consumer discretionary, and to some extent industrials also, right? Industrial capital goods sectors. We have seen some green shoots into the private sector capex, and some of these domestic engineering companies, the capital good companies, are seeing also good export demand coming in from Europe and other places where they are looking to more outsource, okay, from other countries, and India is a preferred destination over there. So I think these three sectors, I think, are where we see the outlook improving and a decent earnings growth, which should lead to outperformance of these sectors, we think, over vis-a-vis the broader market.